Hello and welcome. You're watching the Global Reset here on CNBC TV 18 Prime with me, Prashant Nair. Today we turn the spotlight on SEBI's newest innovation in India's capital market, specialized investment funds or SIFs. These products aim to bridge the gap between traditional mutual funds and alternative strategies by giving investors access to both long and short opportunities in a regulated structure. Joining me today to discuss these products and how they could reshape investor portfolios and what lies ahead are Mr. D.P. Singh, Deputy Managing Director and Joint CEO of SBI Mutual Fund. Swarup Mohanty also will be joining in shortly, Vice Chairman and CEO of Mirae Asset Investment Managers India. Thanks both of you for joining in on the program. But before I come to and go across to my guests, let me quickly run you through some details about this new investment product category. Specialized investment funds are SEBI's latest innovation, a new category that combines the trust and transparency of mutual funds with the sophistication of hedge fund-like strategies for the first time in India. Retail and HNI investors can access long-short opportunities in a regulated fund structure. The key difference, traditional mutual funds can only benefit when markets rise. SIFs introduce flexibility. Investment managers can short stocks or sectors expected to underperform, offering a chance to generate returns even in a falling or sideways market. The real advantage is resilience. By combining longs and shorts, SIFs can deliver steadier performance across bull, bear, and range-bound market phases. They also open up new sources of diversification, giving investors a smoother ride compared to pure equity exposure. Again, you've got to look at all of this through cycles. But investors must be aware this is not a simple SIP type product. The use of derivatives and shorting brings complexity, and outcomes depend heavily on manager skill. They depend on manager skill everywhere, but I guess especially here so. Minimum investment is higher. We'll talk about some of this graphic will come up, which compares SIFs against mutual funds, against PMSs, against AIFs, and we'll put that up in a bit. Risk of volatility and drawdowns also remain. Globally, similar strategies are known as liquid alternatives. They've gained traction among investors seeking hedge fund style returns with mutual fund like accessibility. There are, of course, taxation related implications as well, especially as compared to AIFs. India's SIF framework adapts these models, ensuring regulatory protection while introducing global sophistication. Now, are SIFs for everyone? They may be best suited for high net worth and informed investors who want diversification beyond traditional mutual funds, and those who can ride out short-term volatility in search of better risk-adjusted returns. SEBI has already approved several fund houses to launch SIFs. Quant Mutual Fund was the first mover. Approvals for SBI Mutual Fund, ICICI Pru, ITI, Bandhan AMC, and several more, including Mirae Asset and Edelweiss, are in advanced stages of approval. So, with that short preamble or introduction, let me welcome in my guests once again, Mr. D.P. Singh of SBI Mutual Fund, Swarup Mohanty of Mirae Asset. Gentlemen, once again, welcome to the program. Thanks very much. Mr. Singh, if I can come to you first, sir. How excited at SBI are you about SIFs? And we'll get into the details and the fine print, etc. But, what's the view from the top at SBI IMF with regards to this product category?
First of all, thank you, Prashant. Thank you for having me on the show. And you have given a very nice introduction of the fund. Actually, whatever I or Swarup would have spoken, you have already spoken. But the thing is that the thought process is that SIF as an innovation, as regulated by SEBI, they have allowed us to use it. And we want to use this innovation for the benefit of our investors. We are of the view that the markets, as these are likely to be on the sideways for some time now. And in such a scenario, SIFs, as you rightly put in, if we have the right kind of expertise, we have the right kind of people in the company and use their skill and can make money even in the falling market also by having a right kind of long and short strategies and having a right balance. So what we have done is we are not going to take, though SIF is said to be for the involved investors who can take higher risk, but one of the strategies which we have picked up is one of the most conservative strategy within the 7 strategies approved by SEBI, which is the hybrid, where we'll be playing debt, we will be playing long short, and the long only will be limited to 10 to 15%, and the open position will also be very, very limited. So idea is to generate a good predictable return and take care of volatility. And as you put in the right kind of target group, the people who are sitting on the sidelines looking for, I mean, when to put in money, and they want tax efficiency as well, this fund is for them.
Um, Now, Mr. Mohanty, welcome in to the program. Your first thoughts?
No, I think thank you so much for having me on the show. Like DP rightly said, I think most of what we would have said has been caught very well by you in your opening slides. But here's the thing, first of all, I feel that mutual funds was the platform considered for launching this product from the regulator is credit to what the industry has put on a track record or the way we've managed it so far. From our perspective, it is a incredible progression to our fund management and the expression possibility of our fund management team to the market for the investor through too, as you rightly put, it is also a progression. At the beginning, I would really look at concentrating on the risk profile of the product rather than get into the return potential, because that's where the progression lies. While when you start off in an investing journey, you typically feel it's a return generating process. But as you mature, you realize that it is more a risk mitigation process. Please understand that the mutual fund industry will be for the first time at such a large platform exposed to derivatives. And that's something which investors should keep in mind. It's also very imperative that the fund managers also keep it in line. As you rightly pointed out, since there is no categorization limitation on the product or the portfolio, the fund manager can come out and express himself or herself in a far more broader manner than, say, in the normal mutual fund portfolio because of the categorization limitation. So clearly, I think we are looking forward to building a good risk mitigated track record going forward. We have the approval for the long short equity strategy. And hopefully, once we do a little bit of study on the market, and if I dare say at this moment, the market perceives it as a high return potential product, which I may or may not disagree with in the market. We typically at Mirae Asset launch when the euphoria around product and product launches are over. So we'll be a little watchful of the space and launch at the right time when we feel first the number of people who need to pass the exam to sell this product are adequate, and secondly, when there's some amount of understanding, and such programs actually lead to understanding of the risk side of the product better than what it currently is.
So, Mr. Mohanty, you've opted for the equity long short category.
Yeah, that's our approval so far.
Okay.
And of course, we'll file for all the products,
Correct.
but we started with the equity long short.
And Mr. Singh said that at SBI, they're sort of kicking this off with a hybrid one. Mr. Singh?
Yeah, long short hybrid. Yeah, long short hybrid.
Long short hybrid. Okay.
It's a long short hybrid.
Yeah. I just want to ask both of you, in terms of investment managers, I've heard from some I've spoken to that, I mean, people, of course, with experience, there will be talent which will be developed, but is there already enough existing talent for these kind of products? Mr. Mohanty, you want to take that? From an investment distribution is another thing, as you said, but from a management perspective.
See, our perspective has been whenever you want to launch a fund, you should have the back-end fund manager in place. Yes, we did have talent, but we've gone out and acquired talent too. I think, both were required because first time. So we tried to do both, rely on the existing talent to form the back-end, but some amount of the new category needed fresh talent we've also acquired.
Mr. Singh, what about you?
We already had, in fact, from our gift subsidiary, we are already running one long short fund.
Okay.
This is already up and running. We have internal. We have a very strong investment team, And we are confident that the kind of investment and product team we have in place, we should be able to do the absolute justice to the investors' money.
And the on the distribution side of it, which Mr. Mohanty referred to briefly, Mr. Singh, as he said, I mean, to be able to these will have to be distributed, and people on that side will have to also pass exams, etc. How long is that process likely to take, in your opinion?
In fact, the moment industry started coming out with the product, the number of distributors has multiplied. In fact, today when the day when we launch and the today when we are after 5 days, I think it has doubled. The number of distributors are there, and moreover, the ticket size is higher. And few number of people. It's not a carpet bombing product. This is not for each and every person. As we understand, it's a world investor, and most of the money is coming through the direct investors are directly also putting in money through digital tools who understand this thing. Because you understand, even if we get 10,000 application, it becomes 10,000 crore, 1,000 crore rupees. So that's the kind of number. It's not lakhs and lakhs of customers are coming, but 2,000 almost 2,000 investors, some of the wealth people, all there enough number of distribution bandwidth is there as on date to distribute these products.
Mr. Mohanty, who's the you know who's the customer who comes in for this kind of product? Is it the so people who the PMS limit went up? It used to be what, 10 lakhs at one point, right? 1025, then it went to 50 minimum investment size. So is it that, or is it who's the customer here?
I think, Prashant, that's a very good question and has far deeper meaning than just the amount of money. I think the ability of a person to understand risks better is the customer for such products. When you look at 10 lakh as a minimum threshold, in India, it can be open to practically anybody, right? 10 lakhs is not the land. That's where the responsibility of managing it judicially really comes on all of us, right? And that's the beauty of the SIF side. Suppose we are supposed to launch a long short equity, and say DP is launching a hybrid long short. Two hybrid long short and two equity long shorts may display very different fund management styles, composition. So you cannot brush all the funds in the same category in the same way like you do on the mutual fund side, because say a large cap has to have 75% of equity of large cap. It's defined. Here it is open. So somebody who can study that a little more deeper, a seller who goes beyond just mutual fund returns and just looks at broad portfolios, this product is not for them. Definitely not for. They'll be disappointed more than what they envisaged it to. It is looking at each fund management style, understanding them, and more important, I think, understanding what they want to build over a period of time through this product is very essential. Early stages, but I think the track record, once it starts building, and from an industry which built incredible track record for 30 years, like DP said, all of us are supremely confident that we will build a very good track record going forward. But in this fund, two funds will not be alike is what I'd like to leave behind. So a person who can understand the reason for two funds not being alike is the person who's suited for this product.
Got that. Let's break it down a little bit now, right? In terms of let's compare this to, say, on a taxation basis, and the graphics will come up on the screen, Mr. Mohanty. So, do you think this is mutual fund taxation, this product, right?
Absolutely, and that's the beauty of this product. It simplifies taxation to the mutual fund product. So you're actually buying a mutual fund. There's nothing different from buying a mutual fund. So you're getting a far more evolved risk mitigated product, adding derivatives to the investment basket, and then at a mutual fund taxation level. So it cannot get more simplified for such a evolved product for the investor. And that's the beauty of the whole SIF composition, or the proposition that we have for the investor. And I have to give a lot of credit to the regulator for doing that.
So what happens to specifically AIFs, Mr. Mohanty? Why should anybody put money into AIFs now?
I think it will depend on the track record we build. If we are able to build a far superior track record than them, then money should rightfully flow to us. Otherwise, they deserve the money. It's not about the product. At the end of the day, who builds stronger track record should get the product. That's the bottom line of any financial product. So it'll play out like that. Is my personal opinion.
No, I'm saying just the taxation is
Yeah, I correct. Yes,
returns are
I-
another point, but I
yes,
mean, the
we are more tax. Yes, we have a lower threshold, and I don't think lower threshold should mean anything. But yes, the taxation has a very, very
how are
meaningful.
AIFs taxed? I mean, for our viewers, Mr. Mohanty?
They tax at their personal tax level,
Yeah. And here you got mutual fund taxation.
Swiss capital.
So it's a no-brainer. I
Yeah.
mean, in the sense that AIF investors, you think that as a category comes under a tremendous amount of squeeze, Mr. Mohanty? That's the first guy. I mean, we'll come to what SIFs will do for investors, but what will this do to other categories? You think
I
that?
really don't want to comment very extensively on that. It is an advantage.
Okay.
But just taxation and looking at the composition of the product, yes, the advantage lies with us. But I won't say that based on that one particular thing, investors should move out on products which are already pedigreed and products which have demonstrated track record with some incredible fund management skills on that side. That
No,
should not be the only criteria to move. I
of
really
course.
don't want to.
No, of course, of course. I don't want to press you on that, but
It's an advantage. Yes, it's an
yes,
advantage.
Mr. Singh, you want to come in, sir?
No, yeah. Prashant, now this is not only the taxation part, this is the track record also, which matters. And if we have a strategy which is working very, very well in AEF, that will continue. And there can be mix and match also. Moreover, as your graph shows, that after 2 years is capital gains, right? But if the strategy like our hybrid strategy is equity oriented, there it will be 1 year only. It will not be 2 years plus. It will be 1 year plus the equity. So tax efficiency is definitely one of the factors when somebody invests money, and especially in the AIFs, you can do so many mix and matches, and see there are different strategies which will build up. Yes, as on date, it looks like that it is now better positioned as far as tax efficiency is concerned. But now AIFs will have to do more innovation to come with big strategies. There could be more lock-in kind of thing. There could be exit loads also. But in case of mutual fund kind of products, SIFs, generally these are made very liquid. So there are differences. There are other parameters also which are to be seen. I don't personally feel that yes, there is some benefit which is there, but it's not 100%. It's not a no-brainer. There's definitely something more which AFs can do.
Got that.
Prashant, here's my thing. If I can come in
Yes,
and
yes, yes.
speak on behalf of DP, if you give me the permission. See, look at both the fund management sides. I mean, look at DP's fund management depth that they have across their fund management team. And similarly, we build a fund management depth over the last 16, 17 years. The track record of that definitely speaks for itself, both of us, right? They have a longer track record than us. Based on that and taxation advantage, I think an investor should give us a chance to start with and allocate to us. And if we demonstrate great potential and track record, then the allocations can increase. Is what I'd leave it at that. I mean, we definitely, based on our track record, deserve a chance in this market.
Both of you are being very extremely humble and nice to see. I mean, everybody wants the best outcome for investors at the end of the day. So in that sense, may the best fund manager and best scheme, of course, money will flow there. No doubts about that. I have to take a very quick commercial break here. Just stay with us. Coming right back. Okay, we're talking about SIFs, the new investment category, which is, of course, many fund houses have launched, are in the process of launching, are waiting for approvals, various stages there. And we're in conversation with Swarup Mohanty of Mirae and Mr. DP Singh of SBI Mutual Fund. Gentlemen, thanks very much for waiting, both of you. So Just a couple of points. Mr. Mohanty, when will we see, as you said you'll wait and then you'll see till the distributor force, etc., is ready to distribute these products. When will we see a product from Mirae? Once approvals are out, how far out?
And actually, we were one of the first to get the approval for the long shot.
Yeah.
But we forming a strategy, and like I rightly said, we'd like to educate people more on the downside risk possibilities and the overall risks. See, this is the first time that the mutual funds will be exposed to a complete derivative strategy also, though that is also restricted to a certain level. But we're doing our talks with the market, and see, every brand has its own distribution base. Every fund has its own distribution base. SBI's distribution base and our distribution base can be very different. So we're talking to our own set of distributors. And at this moment, I really would like our product to be held through the advisory side or the distribution side rather than direct. That is our stand. So we once we get a fair amount of buy-in on that part, we are ready to launch. We wanted a little more deliberation on the portfolio side because it's our first product. So that is going on as we speak, and I think we should be ready to launch it. This calendar year will definitely launch.
Mr. Modi, you spoke a few times about risks and downside, etc., and you'd want investors to be aware. So there is 25% derivative exposure allowed, right? But no leverage.
No
Right?
leverage, yes.
So then, in that sense, I mean, there is a balance being struck between some innovation, but also investor protection, because I mean, no leverage does that.
Yeah. So from your perspective, when you look at the formation of the product, I think that all that has been. Please understand, at no point of time, when you look at it from a brand perspective, also, regulator has kept this in mind that it cannot hamper the bigger business, that is the mutual fund business, in any way. So all these things have been taken into consideration, and then the final product is a far more risk mitigated product than what if you let these things loose at day one. And I think all this will change over a period of time. But at the starting phase, I think these things have been well thought of.
Mr. Singh, if I were to ask you to crystal ball gaze a little bit, the mutual fund industry has been a tremendous success story. What will SIFs as a category? What kind of AUM will SIFs as an industry? What kind of AUM will we see 3 years from now? I mean, so it's not very close by, so I won't hold you to it. It's far enough that you can give me a ballpark number. What should we expect, sir?
It's very difficult to put a ballpark number, but I will tell you one thing. See, there's a natural tendency. Human beings always want to move forward in whatever they are doing. Now there are so many number of involved investors. They want to move further in the category. Earlier, there was a gap between mutual funds and the PMS and AIF because the risk mitigation was not there. Now, thanks to the regulator, this new product has come. I really, really think that at least 20% of the incremental money in 3 year period should be into the SIFs. Incremental money I'm talking about. I'm not talking about the base number, right?
Okay, in 3 years from now, 20% of the incremental new monthly inflow should be in the SIF category. I mean, we should get
should
there.
Should be in the lump sum trade, because we are too much into the SIPs also. Whatever lump sum money is coming, 20% of that should be in the SIFs. That's our internal thought process.
I had a bunch of more questions, but I'm being told that I'm out of time. But we will continue these conversations as the industry and many of you launch these products. Really glad both of you could join in, Mr. Singh and Mr. Mohanty. Appreciate your time here on CNBC TV 18 Prime. And good luck to the both of you as you launch these products. And of course, go ahead educating investors, which I think is very, very important because it's a new class. It's for the first time a new product category in that sense. Thank you once again. Okay, well, that's it on this edition of the Global Reset. Thank you very much for watching. More coming up in just a bit.